The following is a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates.
The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Hello, I'm Brian Akers. Welcome to Winning in Retirement. I have with me today a special treat. I have Bernie McVeigh from Akers Financial Group. I'm the leader of our investment committee. Bernie McVeigh, welcome to the show today.
Good morning, Brian. Glad to be here. It's an exciting day to be alive.
Yeah, so you're feeling good. You're feeling excited. Things are great for you.
Yeah, history is being made as we speak.
Well, today I want you to be an historian and a prophet, and we're going to talk a little bit about what retirement feels like, things like that. So we have a lot to talk about. Our show today is a mid-year 2020 review, and then where do you stand when it comes to this mid-year market?
Yeah, it's been an interesting year to say the least. 2020 is not at all typical, as the world has found out. It's started off normally, with the continuation of the bull market, and since about the beginning of March, we've been overtaken by the COVID-19 virus, and the world has changed pretty dramatically.
Exactly right. The year started out with a new law called the Secure Act. The Secure Act is a way that has changed many items, but two of the items is if you were 70 and a half, you used to have to take money out of your IRA at 70 and a half. They changed the law to where you now have to be 72 before you are required to take a minimum distribution. That was the Secure Act. That was way back January 1st of this year. We also, in that act, received something that's not good, and that was the fact that if anybody passes away starting in 2020, your IRAs, your Roths, you only have 10 years to defer that money before it has to be paid out. That was Secure Act, so that's something you need to check into. Secure Act, you can always contact Akers Financial at 833-WIN-RETIRE if you'd like more information on the Secure Act. So the stock market has been a roller coaster, and that roller coaster is one of those roller coasters that we're still on the ride. It's not something that we've gone around the circle and we're back home again. But the market about mid-March, as things start shutting down, really started to go down. The market itself, like the Dow, went down from 29,000 to 19,000, right, Bernie?
Yeah, that's right, and the pace of which that happened was really unprecedented. It really happened over an approximately 2-week period, so it was very intense. Investors were not really expecting the dramatic move, and it's really important that our clients stay calm throughout that, and we attempted to make sure that they were pre-positioned so they could weather a drawdown of this intensity, and then also make sure that they stayed calm and hopefully stayed invested because of their pre-positioning.
The pre-positioning is how you win in retirement, no matter what we're given. What I mean by that is we can't control the markets, but if you are getting close to retirement or in retirement, we cannot have 100% of our money at risk. And in these waves that can occur, that big pullback was in the 36% range just on the Dow Jones. The numbers were pretty bad on the straight down. And those that jumped out at those times, it was hard to get back in as the market started to recover. Now, why did the market start to move back up so quickly?
Well, I think it moved quickly because the market realized that this pandemic was not going to be around forever. And it started anticipating the end potentially of the virus as it faded, or potentially a vaccine, which would help with kind of the return to normal, the reopening. And we began to see the consumers adapt to the current situation. Although a lot of restaurants and bars and retail establishments were closed. Folks tended to adapt their purchasing and consumption, and we saw that begin to emerge. The interesting thing is the market has largely recovered most of its losses here in the last couple of months. You mentioned the downside of 19,000. We currently sit at about 27,000 from a high of 29.
Right. So as the markets start to recover, the federal government had an involvement with their stimulus, with their packages. So that was part of that recovery also, right?
Oh, yeah. So it was interesting for the U.S. government to say that they reacted quickly is kind of an interesting prop. Yeah, exactly. It's an oxymoron. But for them, they actually did move pretty quickly and passed a $3 trillion stimulus package that was aimed at protecting businesses that were impacted. And if you look at the industries that were most severely impacted, it's things like travel, hospitality, retail establishments, restaurants, and so on. So loans were made available to these companies to basically keep them afloat. But the real goal was to keep folks on the payroll. The country was facing unprecedented increases in unemployment, and the stimulus package was really aimed at, a somewhat attempt to, backstop the employers that were really at risk and those employees. The other part of the stimulus package was that was interesting was these came in the forms of loans, and under certain conditions, those loans would be forgiven. So it's so far it's worked out pretty well. But at the end of July, the unemployment part of that, where folks are actually receiving funds in excess of what they were earning previously, is scheduled to expire, and it's uncertain to whether that will be extended or not.
Right. So unemployment, there's the state of Maryland unemployment, and then there is the federal subsidy of $600 a week that's on top of that. And so depending on the job and the industry and how much you're earning, some people are doing very well under that, but that will end. And when that ends, that's going to change things. That change would be that there will be people wanting to head back to work immediately because of the need to make up the difference in the funds. I know that Congress is meeting about trying to find another subsidy to add that and stimulus into the environment that we're in. There are certain industries that are suffering and will continue to suffer as this recovery has been slower than even perceived back in April.
Yeah, in April, I mean, the shutdown was really aimed at, you remember the phrase, 2 weeks to kind of control the spread of the virus. Yep. And that was really aimed at allowing the medical community, hospitals, to get out in front of the provisioning, if you will, of medical supplies and medical doctors to be able to treat at almost near capacity levels what was expected to occur. Of course, the 2 weeks has turned into more than that, much more than that. We're now in the fourth month, I guess I would say, of really the reaction to the coronavirus. And there's a lot of uncertainty about, when we're going to be able to get back to, whatever the next normal is.
Right. Well, that normal, I guess when we get to the profit portion of this show, what we'll talk about is that the normal won't be the past. It's going to be a combination of new. That combination of new is a destination that we're heading towards. It's technology-based. It's based on many things. We'll cover that in a few minutes. Right now, we're still doing a little bit of history. Now, the Fed Reserve has lowered interest rates. The lowering of interest rates, what does that do for the economy in the short run and in the long run?
Well, the lower interest rates are really aimed at helping borrowers. for the most part, consumers. A lot of folks are able to take advantage, for example, of very low mortgage rates. There's a boom in refinancing that's occurring right now, and that will eventually assist borrowers in improving their cash flow, which is really important to kind of staying afloat. Lower interest rates are also good for business, especially businesses that have debt, because they're able to go out if they choose to and refinance that debt and improve their cash flow situation and potentially lengthen the duration of their debt before it's actually due. So it's very business friendly, it's very consumer friendly, and it's having the impact of helping to sustain the stock market at current levels.
Have you seen a defensive investment reaction? Like if you had to describe someone that made a defensive reaction to the market, what would it have looked like?
A defensive reaction to the market probably would involve a repositioning of their portfolios to higher quality as opposed to lower quality. During the intense drawdown, all things got hammered, right? And so in an efficient market, lower quality stocks would drop more than higher quality stocks. And of course, it was an emotional reaction, and it was an intense, sudden reaction. And so quality suddenly became priced similar to everything else in the market. So a defensive reaction would be to move to higher quality, because in a uncertain market, you want to be on those in those companies that are really able to weather the storm.
Yeah, so that defensive measure there is really about getting a strong defense in your portfolio and improving each and every piece of the portfolio. So when we're talking about many things right now, we're talking about the historic thing that's happened this year and how it's affected each and every one of us. You might feel defensive and to a point where you don't do anything. That's not what we want you to be doing. We want you to be in a creating mode where you're looking at opportunities to improve, to build portfolios that will matter to you and make money for you and your family to your future, and to preserve the savings that you worked so hard for. So instead of being defensive and reacting with negative energy, like sort of like slouching back in the couch, instead sit up, get ready to create, look forward to the opportunity that's in front of us. You can begin planning and talking about your retirement portfolios with Acres Financial by giving us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voice message, and Susan will call you back on Monday to schedule a phone or video meeting. Start planning now for your retirement by calling 833-946-7384 or visit acresfinancial.com or check out our Facebook page. It's 2020. We'd all love to have 2020 vision when it comes to investing. Are you using reading glasses, focused just on what's in front of you today, or are you using binoculars and looking further into the future? We'll discuss that when we come back.
You are unique. Just as no two fingerprints are alike, each individual's financial situation is uniquely their own. That's why the Acres Financial Group's team of advisors begins each relationship with a proven process that identifies your financial fingerprint. We'll guide you through a series of steps designed to provide a complete and accurate snapshot of where you are right now. Everything we learn about your financial fingerprint will become part of a detailed financial plan created especially for you. We'll never give you a cookie-cutter proposal or suggest a one-size-fits-all portfolio. The financial plan takes you from where you are now to where you need to be. Begin by discovering your financial fingerprint right now by going to getmyfinancialfingerprint.com. That's getmyfinancialfingerprint.com.
Member FINRA SIPC.
Imagine you're retired. You wake up in the morning and you don't even know what day it is. Every day seems like a Saturday. You can sleep in, cook a nice full breakfast without thinking about morning traffic or work deadlines. The Saturday calmness you used to crave is now your everyday feeling. You're not worried about your retirement income or how your investments are doing. Your biggest decision that day is where you're going to drink that first cup of coffee. Is that the kind of retirement you want? If it is, then sit down and talk with the team at Acres Financial Group. They want to help you get there. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Yes, welcome back to Winning in Retirement. I'm Brian Akers, certified financial planner practitioner, and here with me today is Bernie McVeigh, MBA, and also you've had a CPA during your career as a defense executive, as a chief information officer of a defense contracting company. Then after you retired, you joined Acres Financial permanently. Was that 3 or 4 years ago?
Yeah, it was in 2016, Brian. And as you know, I had a long-standing relationship with your company. We met more than 20 years ago, right, when I was intensely involved in other activities, and asked for some help in taking care of my finances, and and here we are today.
Yeah, I think that was about 23 years ago, which is amazing. But Bernie McVeigh is brilliant, and he's one of those guys on our investment committee that just brings the data, the information, the research that we need with our in-house investment committee. So at Acres Financial Group, we do work with third-party money managers, but we design asset allocation, we design AFG Select. AFG stands for Acres Financial Group. It's real original. I go with AFG Select because AFG selects portfolios and we design it for our clients. So what we want to do in this second quarter of the show is to say, based on this historic data and during the last 6 months, in our portfolios at AFG, what have we done when it comes to some changes at Acres Financial Group?
Well, we talked in the first segment a little bit about the sudden decrease in the values of stocks just generally and how intense the move was and how all things basically got slaughtered. What we did in our portfolios, well, the first thing is we kept our clients invested, right? And that's really important. We didn't let them emotionally react and kind of sell out at the bottom. But within the portfolios, what we did is we seized the opportunity to move away from some of our index holdings into some managed funds. And the thought process there was, since all things were on sale, the manager would then have the latitude to move his holdings to higher quality holdings at discounted prices. So we thought that was very important from the stock portfolio perspective. The other thing in our income portfolios, we were holding some indexed high yield funds, which provided, income for our clients. And as part of the re-engineering of the portfolio, we moved away from those index holdings to managed yield portfolios. Again, the theory being that this dislocation had occurred, and we wanted to allow our managers to adjust their holdings, not only seeking income, but capital appreciation, since a lot of these holdings had been slaughtered.
So these portfolios, we manage for a fee. So it's fee-based investment management. We do use different groups to do the trading. We use TD, Ameritrade, and National Financial Services as what we hold. We earn our money from the fee that's charged, and also the managers, and there's fees inside of there for that, and trading costs. So that's how we do that. Now, what happens when it comes to portfolio management is that when our investment committee gets together and we research and look at what changes to make, once we make that, we send it to a portfolio committee that's at the firm that does the trading, and then they come back and say, all right, we will do this and that, and then we actually have a trading day, and then all portfolios that we have are traded right away. Now, in these portfolios, what kind of asset classes do we currently have? Use the moderate portfolio.
Yeah, so obviously we have equity holdings, both domestic and international. We think the international markets, although they've underperformed, in recent years, it's an important part of a diversified portfolio, and eventually they will outperform, the U.S. market. So we have equity holdings for sure. We aren't really big bond advocates in our portfolios. We have other means of satisfying those portions of the portfolios. And we're not bond advocates because interest rates are at historical lows. And, they are then subject to principal loss if interest rates were to suddenly tick up. And the markets are volatile. That could happen, and when it happens, we expect it would happen rather quickly. We also ensure that we hold other asset classes as well, whether it be hedges, like gold, silver, precious metals. We also favor a portion of the portfolio to be directed at other types of commodities, whether it be a fund that holds commodities that are based in oil and gas or agricultural, whatever it may be. And we certainly advocate for a portion of the portfolios to be held in real estate. So we go well beyond the traditional 60-40 stock and bonds portfolio.
Right. So when we work with a client, what we do is we start out with their unique financial fingerprint, and we build a cash position. We want to have enough money to pay bills for at least a year, and then we ladder out some very protected investments that are protected by banks and the FDIC, and also protected by insurance companies and their assets through the use of guaranteed fixed annuities. And then that becomes part of our overall asset allocation. And then we charge a fee on active management, but only on what's actively managed, not on the whole portfolio, just on that piece. So that active management, we have different styles from income and growth to moderate aggressive, and a lot of other variances from there. So at Acres Financial Group, we made some changes during the months that have occurred with the volatility, and as we've had concerns about the future. What are some of the concerns to the future, and why we have made some of the changes because of what we think might occur over the next 6 months and further out?
Yeah, well, for sure there are concerns out there in the market, right? The reopening is obviously top of mind. How is that going to occur? Is it going to occur? When is it going to occur? All of our decisions are being made kind of at the state level and then even further down at the local level. So counties within states can treat the reopening differently. Obviously, it's in the national interest to get folks back to somewhat of a normal kind of situation so that the economy can begin to recover. Jobs can be reestablished or made more firm for the future. So that is obviously a big set of decisions, and they're fragmented decisions. They're not uniform. So understanding how and when that's going to occur is obviously going to be a driver in the markets. The other thing looming is the election, right? And there's a lot of uncertainty around how that's going to turn out. And we know the markets hate uncertainty. If there's one thing that will hold markets back, it's uncertain outcomes. And, the polls are showing certain things, and some people don't believe the polls. I would say the outcome is anything but certain at this point. And, the market will react differently based on these outcomes.
The hardest part is there's so much news, so much noise, so much information that makes you want to react emotionally on a day-by-day basis. We recommend you do the exact opposite, and that is where you look at your portfolio, your reason for investing, and build your portfolio around that with an income flow, an income plan, having an active portfolio management designed to curtail and lower the risk that you have. There are times of our life when we need to go for it. We need to be fully invested. We need to buy these dips, maybe buy COVID stocks. There's all kinds of things you can do to try to bump your portfolio up on the risk level. But as we're trying to win in retirement, what we're going to try to do is dial that back some. The concerns to the future are low interest rates, where interest rates could stay low and even go lower. I mean, Europe experienced some negative interest rates, right, Bernie?
Yes, they have, and that's a bit of an experiment, and I'm not sure that will occur here in the U.S., but certainly nothing is off the table depending on how things occur. It's kind of a interesting concept. It's kind of like finance turned upside down, that you could actually pay a government, for example, to hold your money. But it has occurred in Europe. Rates are going to be low probably for a long time, although, the faith and credit of the government, as long as that remains stable, I believe interest rates will remain low for a long time. But we're not doing anything, politically to make sure that there's confidence in the markets, in my opinion. Things are just crazy on the political front these days.
Absolutely. And what happens in financial planning and investment planning is you really need to look at your situation, your portfolio, what's out there, and make sure you're okay. Are you truly ready to retire? Are you truly allocated the way best for you and your family? That's individualized portfolios. That's individualized planning. That's what we all need to do at this time.
Yeah, and that pre-positioning is really important, right? Because if you're involved in the market in a thoughtful way, you can ride out the storms. You're not depending on those dollars for your income in the immediate future. And that's kind of the way we like to position our clients.
Exactly right. So being local, being independent, we don't report to a big company. We report to you. We have offices in Forest Hill and Lutherville, but truly we work with clients all around Maryland. Just last week I was with clients in Delaware, working with them as they retired to Delaware. That's an extremely hot place at the moment. So obviously, right now, we do a lot of video and phone meetings, but we do have some people come in for a mask-to-mask meeting. It's up to you when it comes to how to initiate this financial planning process. Why don't you give us a call and begin winning in retirement by calling 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave a voice message, and Susan will call you back on Monday. So give us a call at 833-946-7384 or go to acresfinancial.com. So, you want to retire at 55, 60, 65? That's great. But isn't the question if you'll be ready to retire at that age? We'll talk about that after this brief pause.
Long before 18-year-old Brooks Robinson was signed to play third base, and years before Natty Boh began brewing at the corner of Conkling and O'Donnell Streets, Baltimore families relied on the Evans family and the Evans Funeral Chapel and Cremation Services to help them during some of their most important family moments. Hi, I'm Charlie Evans, and for 4 generations, my family and I have been there for families, providing care and compassion in their time of need. Evans Funeral Chapel and Cremation Services provides the best facility, staff, and personalized service for your family. We have 3 convenient locations to serve the community: Parkville, Forest Hill, and Hereford. For more information, visit us online at evansfuneralchapel.com or call 410-665-9444. Evans Funeral Chapel and Cremation Services, serving Baltimore families since 1865. I invite your confidence.
Acres Financial Group was founded on the principles of integrity, trust, and service. We believe each and every client is unique and deserves advice and implementations that apply directly towards their personal financial fingerprint. This financial fingerprint tells us the objective risk tolerance and purpose of the investment and insurance tools that we use to assist our clients in reaching their goals. By discovering the purpose of each financial decision, we can help you accomplish your goals. Intelligent financial design starts with a detailed balance sheet and cash flow to know where to start. This leads to a financial decision that will allow you to reach your goals with your risk tolerance in mind. Our relationships begin with an initial consultation and grows with each meeting. We would be thrilled to work with you and begin your planning process. Call us at 833-WIN-RETIRE. That's 833-946-7384. Or visit our website at acresfinancial.com. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers. Here with me today is Bernie McVeigh. He has his MBA. He's been a CPA, but you've mainly been an executive at a defense contractor for your career. And then just 4 years ago, you retired from that career and start working with us at Acres Financial on a basically semi working, right, Bernie?
Yeah, and it's been enjoyable. Yeah,
so
it's been enjoyable.
So as you've been changing from full-time career as an executive to really truly retired, who controls your time right now? And basically, what has occurred for you as you retired? Has this been a good move for you?
Oh, yeah, it's been a great move. I would say the biggest change for me is that I now do control my own time. In the past, I was very busy. Work was very consuming. I was commuting and working and traveling, and a lot of my days were really controlled by other people, and deadlines that I had to deal with, in the workplace and the family setting, right? And so my biggest thing is now that that's gone is I really have the decision power over how I spend my time. And that in itself has been very valuable for me as an individual and a family member. And the other side of that is, I have been working with you for a very long time, and the other kind of worry-free, hassle-free aspect of retirement life is, for me, is the financial side has pretty much been, taken care of by virtue of working for a very long time. We mentioned 23 years earlier, to facilitate my retirement. So the time aspect, though, is by far the biggest thing. I am now able to spend it how I choose. I've decided to do certain things. I'm very, very free to kind of decide, make those decisions. It's awesome.
Yeah, because I guess when people are thinking about future retirement and they think about what does winning in retirement feel like, how would you answer that question? How does winning in retirement feel?
It feels very good. The biggest thing is it's very, I wouldn't say worry-free, but the number of things that you actually worry about decrease kind of immeasurably. I mean, you're worried about things like your health and your family and those sorts of things, but you're not worried about all the things that have been imposed on you, in the workplace, and that's very, very refreshing. I mentioned the financial aspect of that. I really enjoy working with clients because I want for them what I've been able to experience, right? And the way you do that is you get involved sooner the better, and you take care of some things that probably aren't on your radar screen today. I know they certainly weren't on mine, and I did some things based on some coaching that made things better for me, and that's what I want for our clients.
Yeah, I can remember that. I think it was a Friday afternoon in 2016 where actually in your living room talking about financial planning, and I said, we were talking about, are you ready to retire and things like that, and then I asked the question. The question was, so what are you going to do when you retire? Because you're retiring younger. You're what, 60
right.
when you retired, or a little
I
younger?
was, yeah. Mm-hmm.
Yeah, so you're 60 at the year you retired. And so I asked the question, what are you going to do? And do you remember what you said?
Yeah, I said, I'm going to come to work with you.
And that was exactly what you said. And then my response was Bernie, if you want that, we'll make that happen, because I know how brilliant you are when it comes to the process of thinking through things. And that's what you've added to Acres Financial over the years here, especially getting our investment portfolio committee, our AFG select models, all of this really going very strong for our client base. So we do thank you for doing that for our clients. And we do thank you for all the participation you've given to our company. Not that you're retiring. We're not announcing any retirement now. We're just talking about what retirement feels like. So retirement, I had a client this week. He actually retired, I believe it was June 1st. And I said, how does it feel? And his answer was this one: every day feels like a Saturday. How do you feel about that answer, Bernie?
Well, my Saturdays during my really intense working life were no picnic. It was catching up with everything, all the have-to-dos around the house. But generally, Saturdays are very kind of free, and you can kind of do what you want with them. So I understand this comment. It's a very good comment. It's and honestly, sometimes I do wake up and say, what day is it? Because I'm really not all that concerned about days of the week anymore.
Yeah, there's not a due date or 3 o'clock tomorrow. You have a conference call with all this stuff you have to have ready for it. It's a nice process for retirement, is not to have that kind of time pressure. So what happens is retirement, you get your time back. The only way that can happen for you to be independent is to have a process of making sure you win in retirement. It's just like anything. You don't show up at a basketball game or a baseball game and expect to win that game without practice, without doing the work, the fundamentals. What we do at Acres Financial Group is we talk about your unique financial fingerprint, which is where you are right now. And we take you from where you are now to where you need to be through a process of planning. Planning is not always the funnest thing to do. It's a necessity. And as we get that plan done, then we can just build the portfolios. Make sure you maximize savings. Make sure you're maximizing how you use the tax law. Make sure you have an estate plan. All of this comes together so that you can be winning in retirement and know the feeling and actually experience getting the time back and knowing where that check's coming. So that is a process that we've been through with our clients for many years.
Yeah, and the plans evolve, right? This isn't like you do a plan, you walk away from it, you just keep doing what you're doing, and eventually you decide to pull the plug and retire. No, life moves on, and plans evolve, they change, your priorities change as life comes at you, right? And I know from my own perspective, we made several changes along the way, and they're important changes, and it's all good because your wants and needs, evolve through time. And it's really important to be able to meet with someone periodically, after the baseline work gets done, right? And say, okay, so how do I feel about this? What's different? What needs to change? And reacting accordingly. It's a very good thing.
One of the things that's happening in the industry here in July is there's been a move to the best interest rule, and where you need to disclose how you're doing the best interest of the client to be able to treat a customer properly. So if you're working with brokers or advisors, money managers, planners, they need to disclose how they're handling the best interest and also giving you a customer, basically a service form explaining how they work, what the conflicts of interest are as they work for you, how they get paid. These are all important factors. I believe that financial planning is the ultimate answer to best interest rule. Financial planning is something, ever since I started in the late 80s as an assistant, financial planning has been in the front of my mind saying, why? The answer is, why do we need this in your financial life for your family? What is the reason? And then once we know the why behind what we're doing, we then can figure out how to do planning, how to invest your money, how much insurance to own, what kind of insurance to own. All of these major financial decisions come in line once we know you and your family's why. What's big in your life? What do you want to accomplish? So that we can set that goal and then build a plan around it. Financial planning that's done as a one-time thing and never again, or a product that's a one-time meet and then it's over, is not financial planning. Planning is a first-year engagement where you really come on board and really do a lot of work, and then you get things set on track, and then you start working it. And it takes time every year, a few meetings every year to make sure that you are in line for those retirement. So when you review, Bernie, with clients, what are some things that you'd like to know about when they're retired? What are some important factors?
Well, obviously, hopefully the debt situation is taken care of. That's a big one. We like our clients to retire debt-free so that they're not held hostage to kind of fixed payments. That's a pretty big deal. But, some other things would be, where do you want to live? Do you want to stay in your home? Are you going to downsize? Are you going to move out of state? What about your children's situation? Are you worried about a legacy kind of a situation for your kids? Have you taken care of the potential medical expenses that you might be facing? Are you covered from a long-term care perspective? Do you even care to worry about it? Because if you don't allocate a portion of your portfolio to that, you basically are running the risk of putting the whole portfolio at risk for it. So, there are lots of things. Where's your income coming from? How secure is it? Is it adequate? What about Social Security decisions? When do you take it? Do you wait? Do you take it now? Are you planning to work at all during your retirement part-time? All of these things factor into the decisions that you will need to deal with and act, in a very smart way.
Oh, exactly right. Because the best part of retirement is knowing that you're okay, but you got to put everything in line to be okay. So it's a chicken and egg thing. You got to do the work so that you can have the money to provide everything for you. The best part of retirement is getting your time back. You decide how to use it. Before retirement, your time is tied up with other commitments, mainly your job. A lot of that goes away. Your time is now consumed by things you want to do. You can begin winning in retirement by calling us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voice message, and Susan will call you back on Monday to schedule a phone call or video meeting. We look forward to when you can come in and see us, and honestly, we prefer to do that without masks, but we are doing those meetings with a mask currently. So start planning your retirement now by calling 833-946-7384 or visit acresfinancial.com and check us out on Facebook at Acres Financial Group on the Facebook. You want to retire at 55, 60, 65? That's great. But isn't the question if you'll be ready to retire at that age? We'll talk about that after this brief pause.
Are there times in some games you wish you could just turn on the TV at the 2-minute warning? Because that's the most important part of the game, right? As a fan, these are the most exciting moments. Your team could take home the victory or crumble under pressure. But when it comes to your retirement, don't wait until the last 2 minutes. So much can happen in the final working years before retirement. Whether you're in your 50s or 60s, near or already in retirement, there's still time to put a plan in place. Don't wait until right before you retire to begin planning for your future. Can you win the retirement game like that? Come in and talk with the team at Acres Financial Group. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
Acres Financial Group was founded on the principles of integrity, trust, and service. We believe each and every client is unique and deserves advice and implementations that apply directly towards their personal financial fingerprint. This financial fingerprint tells us the objective risk tolerance and purpose of the investment and insurance tools that we use to assist our clients in reaching their goals by discovering the purpose of each financial decision. We can help you accomplish your goals. Intelligent financial design starts with a detailed balance sheet and cash flow to know where to start. This leads to a financial decision that will allow you to reach your goals with your risk tolerance in mind. Our relationships begin with an initial consultation and grows with each meeting. We would be thrilled to work with you and begin your planning process. Call us at 833-WIN-RETIRE. That's 833-946-7384. Or visit our website at acresfinancial.com. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers. Here with me today is Bernie McVeigh, one of our experts at Akers Financial Group, a financial advisor and the head of their investment portfolio committee. Today we've been talking about the mid-year report 2020 and where do you stand? We've been talking about, are you ready to retire? That's a very important topic for you. The younger you are, you need to think about, what am I doing for my own financial future? So as you're listening, and you might have missed the first 3 quarters of our show, we're here in the 4th quarter of the show of Winning in Retirement. Do you know that you can go to acresfinancial.com, and on acresfinancial.com, there's a radio tab. You click that button, and you'll be able to see all the past shows that we've had. Those past shows you can listen to. You can listen through the internet. You can listen through the podcast version we have there. And so you can enjoy our topics and hear what we said before. Sometimes we're fun, sometimes we're not, but we do try to give information each and every Saturday. This show will actually be up on that website by Wednesday of next week. So go to acresfinancial.com and check us out there. All right, Bernie, so this segment, the question I had is, so people want to retire at 55, 60, and 65, and that's great. But it isn't the question, but the question really is, will they be ready to retire at that age?
Yeah, and that's a very important question because retirement is a long-term prospect, right? People used to think of retirement as being, the kind of the end. And what we're really understanding now with life expectancies rising and so on, it can be just as long as your working career. And that's a game changer, right? To realize that you, in an inflationary world, potentially, that you need to be able to meet your income needs across a very long period of time.
Absolutely, especially when people retire earlier. So early to me, actually, let me go with this basic knowledge. 67 is sort of the full retirement age for Social Security. We'll use that as a retirement age. So earlier than that, 62, there are penalties to Social Security retirement, around 30% less money, roughly. So that's just on Social Security. You get 30% less if you start at age 62. Prior to 62, if you retire, you don't get Social Security. So what happens is you have to have more than Social Security to retire, and you better have more if you really want to retire and stay retired. The longer that we need to be retired, say 25, 30 years, you need to be able to answer this question. Are you truly ready to retire? What if I told you that your expenses could double and even triple in your retirement years? Will your retirement setup handle that? That's a very tough question to ask because some people are trying to race to 62. At 62, they say, I'm bringing in this much money. It matches what I need. I'm fine. Without thinking about 12 years into the future when things start to cost 50, 70% more than they originally started at. It's a big deal, this inflation, when it comes to how you retire.
Yeah, it's a big deal kind of with normal kind of living expenses, food, housing, utilities, that sort of thing. But when you start to factor in, okay, so how am I going to provide for my medical care through this long-term prospect? And what's that going to cost? And that's a constantly changing kind of scenario, right? I mean, it's evolved and re-evolved a couple of times in the last 5 years even, right? So medical care, and then, what about your discretionary expenses? Are you going to have to squeeze those out of your life if you retire too soon?
Yeah, so one of the things we want people to do is to be debt-free at retirement. We think you're going to have to trade your mortgage payment for your health insurance payment. Now, under the current healthcare law, 65 and over, you get Medicare, Medicare supplement. But before that, you got to find insurance on your own or through the ACA. There's all kinds of ways of trying to provide health care if you want to retire earlier than that. But it's all part of retirement strategies. Are you ready to retire? It takes a lot of components. Some of those components are your balance sheet, your assets, your debt. Really, where are you standing right now? The second part of it's cash flow and taxes. Where's money going? Do you know where your money goes? You need to get some of these apps that are out there where you can track investments and you track your insurance. You can track every bill that you pay, your checking accounts. You also need to track your credit cards and how you're paying them off every month, right, Bernie?
Yeah, and we very much advocate that all credit cards be paid off on a monthly basis. That can become a trap for you from a debt perspective, right? These revolving credit balances that have significant interest payments tied to them. We like to see that debt retired monthly.
Yeah, it's as simple as when you go to a store and charge, do you want to pay 20% more for that item? That's a way you need to look at it, because many people will spend years paying off what they just charged last month rather than paying it off within the 30-day window.
Yeah, and that's a very slippery slope to kind of find yourself on, because many people just keep accumulating that debt and they're really unable to pay it off. And then it comes down to, is there an asset that I can take a secured loan on to kind of get rid of that? So don't fall into that trap. That's a debt trap, and we like to see debt extinguished monthly.
Especially in the year 2020, we're seeing a lot of volatility, a lot of uncertainty. So today's show has been about mid-year 2020. Where do you stand? If you have debt and you don't know your cash flow, you need to figure out a way to get that under control so that you won't have issues when it comes to your cash flow. How do we win in retirement? You need to make sure you're winning now. That winning now is creating positive cash flow in your budget. There's a lot of work that has to happen to make your finances better. So if you're driving your car, think about one thing that you can change that'll make your finances better. That one thing could be you go online on your 401k and raise it by 1%. It might mean that you round up your mortgage payment. Instead of paying, say, $2,635, you pay $2,700 a month. Whatever the number is, round up the debt payment, round up the savings payment. You won't miss it. You can do a lot of things that can really help. So, Bernie, what quick advice would you give someone who wants to save more?
To pay yourself first, I guess, is the biggest thing, is not to save what's left over, but to take it off of the top and allocate, that money the day you get paid to either a 401k or to a separate account that you're saving money in. The other suggestion I would make is start early. Don't wait. The sooner you start, the better off you're going to be long term because of the power of compounding money, right? And if you wait 5 years to start, you might be able to double your money if you would have started 5 years earlier, right? Just depending on the return. So start early. Don't wait. Get involved with somebody who can help you, no later than mid-career, I would advocate. But even if you can do it sooner, that's better yet. I mean, if you wait until your runway is gone, you're into your 50s or even early 60s or whatever, it becomes a much more difficult situation than if you get involved early.
Right, so that becomes a race to the finish where they got to sacrifice everything to be able to retire. That typically happens about the day after the last kid graduates college. They give us a call and say, now it's about me, I need to get ready to go on retirement. And my response is, well, if we're short on retirement, we need to save a lot. We need to pay off debt fast. You'd be amazed how people get used to having a certain standard of living, and if they're able to maintain that and then stop the extra spending on college and other expenses the kids cost, and use that money for retirement, it can catch up quick. But it can be a lot easier if you let the money do the work for you. Time lets the money do the work for you. Just like time's most valuable in retirement, that you get your time back. When you're younger, you have time. That's probably your best investment. Should you be buying into this market? Absolutely, you should be buying into the stock market with your long-term investing. Long-term is 3 to 5 year money or longer. Buying into this, you want a volatile market to be buying every paycheck, to buy every week, every month. That's called dollar cost averaging. In a properly designed portfolio, that is exactly the right thing to be doing when it comes to making sure you're going to be okay. What other investment advice would you give as we close out our show about 2020?
I would say that expect continued volatility. It's uncertain whether markets are really going to go up or down in the short term, but in the long term, you need to kind of stay invested and create good habits. Save your money off the top. Start early, and don't worry about the noise. You talked about the noise. Try to filter it out and stay true to your goals.
We recommend that you need to talk to a professional financial advisor. You talk to a certified financial planner, practitioner. You need to talk to someone and make sure your finances are in line to reach any and all goals that you have. You can do that by going to acresfinancial.com. Acresfinancial.com will have information about all coming events we have. There's a lot of things going on at Acres Financial as we try to work with our clients, even remotely. We have webinars for them, a lot of events that are pretty good. So in retirement, the biggest worry of your day should be where to drink your morning cup of coffee, where every day seems like a Saturday, free of stress. Your retirement income or investments should be taken care of, and having them taken care of by Acres Financial Group could be the future you would like to have. It's not too late. We want to provide this retirement for you. All you got to do is call Acres Financial Group and ask for a free visit or a free phone call and video meeting. You can do that by calling 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voice message. Susan will call you back on Monday to schedule a phone or video meeting with one of our team of advisors. Start planning now for your retirement. Make sure you win in retirement. Call 833-946-7384 or visit acresfinancial.com. And, of course, you can go to Facebook and check out Acres Financial on Facebook. Bernie, thank you very much. Thank you for listening. I'm Brian Akers from Acres Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated and investment advisory services through Kalos Management Incorporated. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Advice given on winning in retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services.
The choice of your child's school is vitally important. Wouldn't you go a few more miles for something really special? I'm Brian Wilson, principal of Harford Christian School. Harford Christian is an independent school in northern Harford County, serving students in preschool through 12th grade. Our Uncommon Core makes all the difference. For nearly 50 years, we've partnered with parents in the important responsibility of training children in God's truth. Our biblical worldview stands in stark contrast against today's culture. At HCS, political correctness is never prioritized above God's unchanging truth. We hold the bar high as we prepare students to serve God's kingdom, not just the workplace of man. Affordable tuition and transportation options put the choice of Christian education within your reach.
Come visit the longest established Christian school in Harford County. You can become acquainted with us through a private tour or on the web at harfordchristian.org.
The preceding was a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates.
It all starts with just one thing. This summer, consider gardening indoors. Miniature citrus, pineapple, and tomato plants can all be grown indoors as well as outside. Find tips and more at onethingus.com. What's your one thing?
Broadcasting from the Thompson Creek Window Company studios. High-quality windows at an affordable price. Direct from their local factory. This is WJZ-FM Gainesville, Baltimore. 105.7 The Fan. A Radio.com sports station.